Well, hello and welcome to another video by Financial Learning. On today's video, we're going to take a look at CleanSpark Inc.'s latest Bitcoin mining numbers. They did close positive today at over 18% on the day. We're going to take a look at that as well as the Ortex data, which has their live short interest data. And then we're going to look at some of the global hash rate information, also the network difficulty for some of that hashing. And then I'd like to provide my own personal opinion on why I believe the pure Bitcoin mine play is still the way to go compared to the HPC AI sectors. So without further ado, let's get right into it. All right, jumping straight into the Bitcoin mining metrics, CleanSpark is just a little over 2/3 of the way done for the month. And if you look at the March monthly mine, they're currently sitting at 521.287 Bitcoin mined. The revenue so far for the month is $44,391,948. And the highest amount of Bitcoin daily mined so far for CleanSpark comes in at 23.485, and that was on March 23rd. So you could see they're already starting out with a very strong month here in March, and they are on pace to hit that 700 Bitcoin mine for the month, which will be a good achievement for CleanSpark. We'll look at that hash rate to see if there's any level of difficulty changes that should be expected in these last few days in just a minute, but let's take a look at some of the other key data points. So you can see I have last price of Bitcoin sitting $87,640, and that was the price as of the video recording. And you can also see the February HODL number. This came from one of CleanSpark's press releases. So if you take that HODL amount, add the March monthly mine amount, you're going to get that new estimated HODL total. I say estimated because I don't know how much Bitcoin CleanSpark has sold. They typically sell 1 to 2 Bitcoin each month just to help cover some fees. But looking at that, with the current price of Bitcoin, you can see that their treasury HODL has went over $1 billion again. Last time it did this, Bitcoin was over $100,000. The fact that we're in the $80,000 mark and they're still having a Bitcoin treasury HODL over $1 billion does speak volumes to CleanSpark's fundamentals, in my opinion. Moving over into the depreciation with and without, I'm looking at the all-in price of Bitcoin. So we're looking at that cost to mine Bitcoin. We're looking at the Bitcoin break-even price, and I have that broken down in a few different key data points. Let's take a look at that together. So looking at with depreciation, you're going to see the Bitcoin break-even price. I have it at $82,571. So you can see the month to date average Bitcoin price mined is $85,158. So with that being said, you can see that they do have a profitable month so far here in March. They have a profit margin percent at 3.04% and a total profitable amount at $1,348,000. Now, that may not seem like much, but if we take a look at what all has been subtracted from that $44.3 million of revenue, you're gonna get a better understanding. So you can see here that the cost to mine Bitcoin, this would be both the energy cost as well as the depreciation cost, comes in at $66,058. And I did get that from their latest earnings report. If you take that amount and you go ahead and subtract the month-to-date professional fees, I'm taking the total number of days so far for the month, and using that ratio and comparing that against the quarterly earnings report, I'm able to get a pretty good estimate of what the professional fees, the payroll, and the G&A expenses could come in at. And of course, we don't know what CleanSpark is doing behind the scenes. They could very well be decreasing some of these professional fees, the G&A expenses and whatnot. So with all that being said, if you take all of those different costs and you roll it all together, you're going to get a total month-to-date cost estimate at $43,043,000. So if you take the revenue minus that, that's how you're able to get that $1.3 million of profitability. Now, one key thing to recall is that when you're looking at miner depreciation, that's just a way that they're able to write off some of this revenue. Using this aged equipment as a depreciation line, they really have a cash value at $18 million of profitability. If you think about it in terms of paying out that electricity and paying out the professional fees, payroll, and the G&A expenses. And they can use that $18 million, of course, to purchase additional miners, to refresh their mining fleet as the time comes. Really, that money is available for operational expenses. They're just able to write off some of that revenue so they don't have to pay taxes on it at the end of the year with that depreciation amount. So again, this is a very healthy operation in my opinion. Looking at that profit margin without depreciation being taken into account, you're going to see they have 40% profit margin. So that's pretty incredible in my opinion, looking at CleanSpark's fundamentals here. So this is just a pure Bitcoin mining play company. I would like to compare this company against some of the other companies in the sector that have decided to kind of shift over into that HPC AI. I'm not going to really look into some of their numbers and fundamentals, but I did want to look at really, I guess, what the overall hypothesis would be on why companies would be making that transition or changing over to a more of a hybrid structure. But before we do that, I'd like to talk a little bit about what the global network hash rate looks like, as well as the difficulty levels. All right, and before we jump over and take a look at that global hash rate and some of that network level difficulty, I did want to briefly mention CleanSpark's price action today. So they did have a very green day, close over 18% on normal trading hours and a slight downtick during after hours. But overall, even including after hours, a very strong finish for CleanSpark. Now, I did think it was interesting to see what all was that price action volume really about. Of course, we know that they were added to the S&P 600 small cap index fund today, but other than that, was maybe the shorts closing and the shorts covering. Maybe that had something to do with some of the upward pressure on price action we saw today on CleanSpark. So I did take a look at that Ortex data, and I'd like to take a look at that with you all right now. All right, and I wanted to take a look at this Ortex data and really go over some of the short interest percent with respect to free float, and then talk a little bit about that cost to borrow and the shares available. So first thing, take a look at is going to be that live short interest. This is of course estimated data from Ortex. You can see here that it's at 33.6%. So a pretty massive uptick in short interest percent for CleanSpark compared to just yesterday. So it wasn't shorts closing that was causing some of the price action in the upward direction. If anything, these shorts decided to start doubling down a little bit and to try to help keep the price action from continuing upward. So it does look like the S&P 600 small cap index introduction had a lot to do with the price action today. Besides that, of course, look at the price of Bitcoin. It did jump up over $3,000 additional dollars compared to just yesterday. So again, that had a significant impact as well on CleanSpark's price. So again, the great part with Bitcoin price is if it's moving in the upward trajectory and CleanSpark has other catalysts that are in its favor, the odds are that the price action should start to go up. This is not financial advice. This is just my opinion based off of what I've seen historically in CleanSpark's price action history. Now, taking a look at the cost to borrow, you can see it has increased to 0.94%, and the shares available has decreased down to just 850,000 shares. So if we are to have some additional price action, some additional buying pressure on tomorrow's trading day, we could see these shares available getting decreased even more and that cost to borrow percentage to keep increasing. Now, that all being said, we do need Bitcoin price to continue to increase as well. So if we were to be able to get it back to the 90,000 mark or higher, that of course is going to help CleanSpark have more of an upward trajectory. So we'll all have to wait and see, but I am very anxious and interested to see myself. Now that we're done with this, I'd like to talk a little bit about that global hash rate and just the level of difficulty to expect as CleanSpark does close out this month of March. All right, and this is a new view that I like to share with you all, and this comes from memepool.space/mining. A couple things I think it's important to show is going to be that hash rate. You can see the current hash rate is at 829 exahash per second. That, of course, is going to be the global hash rate. And then you can also see the difficulty level, currently sitting at 113.76. So comparing that against when we expect the next level of difficulty to be increased. You can see that above that graph on the right has the estimate at another 6.69% of a difficulty level increase. And this is expected to occur in about 11 days or so. So we still have the remainder of March to basically continue to mine using the current status quo. So if CleanSpark is able to keep all their miners running and functioning as they have for the first half of March, we should be able to see that 700 Bitcoin barrier be broken this month for CleanSpark. And then you can also look underneath that graph, you could see some of the difficulty changes. You can see exactly when that occurred. You can see there was a level of difficulty that happened 38 hours ago with an increase at 1.43%. So even with that difficulty increase, we did see CleanSpark still have a very solid 23 Bitcoin day. So I'm not concerned, looking at this data at least, that CleanSpark won't hit that 700 mark. Of course, I don't know if they are planning any upgrades at any of their facilities where they may have some intermittent downtime, or if there's any crazy storms and blizzards that could potentially pop up out of nowhere. But just looking at the network hash rate and looking at the level of difficulty, I don't have too much of a concern myself personally looking at this data. And then if you look at the left-hand side, you're going to see one of the pools. You can see a nice little pie chart that shows a wide range of different Bitcoin mining pools. And then you can see some of the latest blocks that have been mined, and you can see which group mined those blocks. And if you look at some of CleanSpark's data in terms of Bitcoin mined, you can see they do get theirs from Foundry USA. So again, anytime you see that Foundry USA, that's a probability that it is going to be getting rewarded to CleanSpark. Not sure how much of that Foundry USA is for CleanSpark, but that is what I do see on a lot of their wallet transactions. So with that being said, I like to pivot a little bit and share with you my personal opinion on why I still think that the pure Bitcoin mining play is the right move for these Bitcoin mining companies. Of course, if you don't agree, drop a comment. Love to hear your thoughts on it. But I'm not just going to share my thoughts. I'm going to share some quotes from some key members in the Bitcoin mining industry. All right, and the first article I want to briefly share with you is a little bit about that background. As I did mention, some of these Bitcoin miners are making that pivot. So I like to just share a quick synopsis from this specific author. This is Gino Matos, and this article was published in February 2025. And it is the US miners pivot to AI and HPC amid fee revenue uncertainty. So we'll show some of those miners that did decide to make that move, and then we'll key in on one of the Bitcoin miners that has already set up a significant partnership in the HPC network. We're going to talk a little bit about CoreWeave and Core Scientific. But before we do, let's jump into this specific article. All right, and here are some of those key ways at which the Bitcoin miners are starting to shift a little bit here in 2024 and 2025. So it says here, successful Bitcoin miners are integrating alternative strategies to optimize revenue streams. Some use mining to subsidize grid expansion in remote energy markets. So I think CleanSpark is actually one of the miners that does take advantage of this. They do find these small pockets, these small cities, these towns that did at one point in time have a very high demand for power generation. But over time, some of the different industries that were using a heavy amount of that power have moved on or have just retired in general. And CleanSpark has been able to come in, develop some infrastructure, some power infrastructure, some mining infrastructure in these key towns, in these key cities. And they were able to negotiate some pretty low power rates in order to be able to make the Bitcoin mining profitable for them. And then some of the other miners, they have taken some of these other steps. So in contrast, other leverage existing power infrastructure to support AI and HPC workloads, which offer higher margins and unlock new financing avenues. Now, those two items, they do look rather intriguing, but one thing that I'm going to spend some time on is the CapEx involved in the GPUs that are needed in order to power these data centers for both HPC and AI. But before I move into that, let's continue reading. Innovations in liquid cooling systems, chip design, and co-location technologies further improve operational efficiencies. So again, some of these miners have opted to perform somewhat of a hybrid role, where some of their grid, some of their infrastructure is still being used for Bitcoin mining, while another half is being used for this GPU data center style work. So again, that's not necessarily a bad thing to do. And I do believe everything has its time and place. And I'll share some of my opinion in a little bit, but let's continue on. So the shift toward AI and HPC has gained momentum following CoreWeave's 700 megawatt AI HPC agreement in 2024, prompting several Bitcoin miners to explore similar revenue streams. Now, I'm going to spend some time talking about Core Scientific and CoreWeave, but let's take a look at some of these other Bitcoin miners and see how they've been preparing for this pivot. So Bitfarm has engaged in AI HPC consultants to assess feasibility across North American sites. At the same time, BitDeer has cited ongoing discussions with AI HPC development partners after completing its data center consulting engagement. Cypher Mining secured a $50 million investment from SoftBank in January to support their HPC data center expansion. And Riot Platform expanded its board of directors to include expertise in AI HPC investment banking, data centers, and real estate. So some of these miners are just taking a hard look at it, while others are beginning to act on it. Meanwhile, Hive Digital Technologies appointed Craig Tavares as president and COO of Buzz HPC to lead the firm's growth in HPC and GPU cloud services. And then one other company here, Iris Energy, also known as Iron, is advancing its AI and HPC initiatives with a 75 megawatt liquid-cooled AI HPC data center set to launch at their Childress, Texas by the second half of 2025. Additionally, the company plans to expand its Sweetwater site with another 600 megawatts. The expansion will bring the total capacity for Iron to 2 gigawatts, making it one of North America's largest AI HPC eligible sites. The report also noted the rarity of such large-scale sites and emphasized their strategic advantage in providing dense compute clusters essential for AI model training and iterative workloads. Now, one thing I want to stop before I continue reading, that is an excellent way to keep your workforce kind of centralized. Now, one thing to note is if there's any severe weather or any other form of natural disaster that does end up hitting this location, their entire data center structure is going to be compromised for a specific amount of time, depending on the cleanup impact. So that is one thing that they will need to be able to put in a clause for their different customers for the HPC AI, as the data centers need to be running all around the clock in order to maintain their status quo. But moving down into the scaling and electrical capacity. So this is some very interesting information. It says, and this is for a total of 13 publicly traded Bitcoin miners. And you can see some of their business model, some of their changes that they are expecting, some of their forecast information. So you can see they revealed that as a total collective here, so for this specific 13 publicly traded Bitcoin mining sector, they currently have operational capacity of 7.1 gigawatts. They are planning to expand to 11.7 in 2025, and then up to 15.9 in 2026 and 20.4 in 2027. This does represent a compounded annual growth rate of 42% over the next 3 years. So that is some significant amount of infrastructure that will need to be built out to be able to handle that much of a power load. Also, they're going to have to look at the current grid situation to see how many additional power generation sites will be needed in order to be able to host this much power. And taking a look down a little bit further, you can see that an additional 7.3 gigawatt pipeline is planned for 2028. So that is a rather large amount, and that's a little bit further down the path, thinking 4 years out. But regardless, these 13 Bitcoin mining companies are planning on some significant amount of expansion. Now, When you're talking about expansion, you're talking about capital expenses. So I did want to show a little bit of the capital expense line here, and then I want to jump into some more details on Core Scientific's CapEx spend, as well as some other key data points that one of their executives has pointed out. So you can see here that scaling these operations will require significant investment. So assuming expansion through 2027, we are looking at the Bitmain S21 Pro fleet when we're looking at this specific CapEx model. They're priced at $5,000 each. So alongside $450,000 per megawatt for supporting infrastructure, total CapEx expenditure for this total amount of power input is going to be $24.8 billion. So these 13 companies are going to need to generate that much in revenue or generate that much in shareholder equity in order to fund this large of an expansion. Of course, we won't know how much of either of those are going to be required. That's going to depend on the price of Bitcoin and how they're able to utilize some of their treasuries as financial instruments to help fund some of this. But just keep that in mind that that is the type of CapEx spend for these Bitcoin miners. Now, of course, the CapEx spend for the infrastructure build out doesn't have to go to all Bitcoin mining. Some of these companies will be performing hybrid roles. And you can see here that it says, however, Bitcoin miners are unlikely to dedicate all capacity to mining since securing electrical capacity has become a key competency among growing AI power demands. So again, as I stated, a lot of these publicly traded Bitcoin miners will be looking at the HPC AI sector to see exactly how much of this electrical capacity should be used for the GPU data centers compared to the Bitcoin mining centers. All right, moving over into the Core Scientific CoreWeave deal, I want to use this as my model when we're talking about the HPC AI compared to just the pure play Bitcoin mining. So this transaction summary, you can see here, they have planned for 590 megawatts to be dedicated to the HPC infrastructure. This is over $10 billion of revenue projected, but this $10 billion is going to be over the course of 12 years. So it's going to come out to about $850 million per year in revenue. Now I say revenue because there are some costs that are associated with this revenue, with this transaction. So the first thing to note is this specific summary states that the client will be paying for some of the CapEx. As you can see by that subscript, I will read you that in just a minute, but they'll also be paying for the power and the utilities. So there won't be any power costs going against Core Scientific to be able to run these data centers. The client is going to pay that portion, that premium. But when it comes to CapEx, we haven't really talked too much about what the data centers for HPC and AI actually take up. But here's one note just to take into account. Looking at the subscript 4, it does say up to $1.5 million per HPC megawatt, or approximately $750 million of data center build-out costs are funded by CoreWeave and credited against the hosting payments at no more than 50% of the monthly fees until fully repaid. So again, that's how much of the CapEx CoreWeave will be funding. So the rest of that is going to have to be funded by Core Scientific. At least that's my understanding of this information. Again, if I'm not stating this correctly, please correct me in the comments so that I can make sure that I get this news correct. But we will look into what Core Scientific actually states will be the cost per megawatt for the HPC data centers. But continue on, it says that they do anticipate to have 75 to 80% profit margin. Now, when we did look at Bitcoin mining profit margins, specifically CleanSpark, you saw that without depreciation, it was about 40% profit margin. So of course, this does look more favorable, but we still don't really understand the CapEx involved because that's really going to dictate the return on investment. So we'll talk about that in just a moment. But the last thing I want to point out, again, this is a 12-year contract with potential of 2 additional 5-year options. So they could extend from 12 all the way to 22 years. Now, at that point in time, it would be beneficial for Core Scientific because they would have most of the GPUs paid off at that point. But you have to really look and see what is the total amount of depreciation, or what is the hardware age impact for the GPU data centers compared to the Bitcoin miners. Bitcoin miners currently, they depreciate somewhere between 3 or 5 years. We did see that CleanSpark did recently change their depreciation to a 3-year model. I believe the GPUs could last anywhere from 6, maybe up to 10 years. So even within this 12-year contract, there's going to be some additional CapEx spend in order to replace some of those GPU chips, or they'll just have to run at a maybe lower standard than what we will see in 10 years from now. All right, and this is an article from CoinDesk.com, and you're going to see some quotes by Russell Canaan, who is Core Scientific's Chief Development Officer. But let's read a little bit of this article first. It says, but AI fleets need constant uptime, and that means implementing expensive power redundancy measures, including batteries, backup generators, and uninterruptible power supply or UPS systems. Now, if you recall, when I was talking about the childress location there in Texas, they have, and I'm talking about iron here, they have their entire infrastructure all in one location. So if there's any kind of natural disaster, any other phenomena that may occur, which would put their specific infrastructure into a compromised state, they're going to have a significant amount of fuel source or battery backup in order to be able to keep those data centers running. And remember, they're going to be under contractual obligations to do so without seeing some significant penalties. So continuing on, this is another example. Whether you're mining Bitcoin or running an AI cluster, machines must be cooled to avoid overheating. But the optimal cooling method will depend on the application, Canaan said. Most Bitcoin rigs are cooled by fans or being submersed in a pool of dielectric fluid, which comes at little cost. The GPUs used for AI, on the other hand, require some form of air conditioning or to pass fluid over the machine's silicon chip, two methods that consume large amounts of energy. Other differences emerge when you look at the kind of hard drives used for AI fleets compared to Bitcoin mining operations, or the amount of fiber and connectivity that is needed for each site. So let's continue on a little bit further. It says, big picture, AI sites tend to be much more expensive and less versatile than Bitcoin mining operations, which can be plopped in all kinds of remote locations all around the world. That's why Core Scientific, as a rule of thumb, when examining a new site, will determine whether the economics of it makes sense for AI purposes first, and if not, look at it from a Bitcoin mining perspective. If I built a world-class air-cooled Bitcoin mining site, I'm going to spend probably between $500,000 and $750,000 per megawatt, Canaan said, but that cost climbs up to $10 million to $12 million by megawatt for AI-related GPUs, he said. So I want to stop right there. That is the big takeaway that I saw when I was looking at the differences between the pure Bitcoin play miners and this hybrid form of HPC AI. You look at the CapEx, that is over 10 times the cost to build out the infrastructure and add all the GPU data center hardware in order to be able to run these AI HPC centers compared to Bitcoin mining. So again, I ask you, is that a good use of these Bitcoin miners' funds? Another thing to think about is a lot of these contracts will be locked in for 10 to 12 years, as you can see from this CoreWeave deal. Within 12 years, we'll already had 3 additional Bitcoin halvings. And typically, if you look at any of these Bitcoin cycles, you will see that the price of Bitcoin continues to increase after each halving, after some amount of time. You did see this in 2024, after the Bitcoin halving happened in April. We saw some significant increases to the price of Bitcoin in October, November, and December. So that goes without saying. In 10 to 12 years from now, would you expect the price of Bitcoin to be remaining around this $80,000 per coin amount? Or do you think it'll be closer to $300,000, $500,000, or even $1 million per Bitcoin? I don't know that answer, and it cannot be predicted. However, you can look at historical charts and get some form of a good educated estimate. So you're not locked into a very tight and stringent revenue amount when Bitcoin mining. That revenue will fluctuate. Yes, there are bear market times where that revenue amount may go down. But if you recall, a lot of these Bitcoin miners have decided to hodl their Bitcoin. They're not just selling it the same day it's mined. So that does allow that Bitcoin to appreciate after the bear cycle is done and the bull cycle does take effect. So with all that being said, in my own personal opinion, I do see the value with Bitcoin mining compared to the HPC AI. Of course, we do need the HPC AI data centers to pop up in order to be able to support our thriving economy and to continue innovating in that sector. However, from the Bitcoin miner standpoint, it still makes a lot of sense to me to stick with Bitcoin mining. And of course, one other note, each of these Bitcoin halving cycles does mean a reduction in the amount of Bitcoin mined. So there will be some additional infrastructure that will have to be added at these different Bitcoin mining sites and additional miners purchased at each halving in order to stay competitive. But my question, as more and more of these Bitcoin miners are pivoting to a hybrid state or really selling out of Bitcoin mining, look at TeraWolf. They sold a significant amount of their Bitcoin mining stake over to one of their partners so they could focus on the HPC AI side of the business. So if a lot of these miners start to do that, what will happen to that global hash rate? Will it have a small downward tick, which would mean more Bitcoin mined for all the other companies that have stayed true to Bitcoin mining? They would then get an increase of market share percentage compared to the overall global network. So again, I think that as some of these companies do bow out or begin to parallel pivot over into the HPC AI data center network, I do think that we will see some benefits for these pure Bitcoin mining companies. So again, that's just my personal opinion. Love to hear your thoughts on it. All right, and that about wraps it up for me, folks. Hope you enjoyed this update on CleanSpark Inc. We took a look at their March Bitcoin mining numbers so far. We then moved over into short interest percent with respect to free float. And then we talked a little bit about that global hash rate and that network difficulty amount and when we would expect the next change to that. And then I shared my personal opinion on the state of the Bitcoin mining companies, the ones that have decided to start pivoting into the HPC AI compared to the pure Bitcoin mining play companies such as CleanSpark. So I hope you enjoyed this video, and if you did, please consider giving it a like, subscribe to my channel if you haven't already, and make sure to turn on that notification bell so you can get my latest videos right when they're released. And then drop a comment. Let me know your thoughts about pure Bitcoin mining play companies compared to the ones that are taking the more of a hybrid approach. Love to hear any feedback from you all. And with all that said, I hope you all have a great rest of your day, and I'll see you on the next one.